Being smart about money, it's all about trade-offs. The most important thing when you're making a decision for your finances, get the facts and then apply them to your specific circumstance. Nobody who's putting out social media knows you as well as you do. So educate yourself and then look hard at your own situation so that you can be smart about money. When it comes to finance, there are competing priorities. So if you had to decide between a retirement or a 529, would you rather the retirement? Well, the nice thing about saving for retirement is that once you save for retirement, you can use the value of time to grow your investment. You have all of these years for it to grow and grow and grow. And if you don't save for retirement and you try to do it at the last minute, you've lost all of that time value of money, and you'll end up needing to save a lot more to make the same impact. When you're thinking about would you rather save for your retirement or put money in a 529 for your kid's education, remember, your kid can get loans to go to college. No one is going to loan you money to retire. When you're looking at your 401k and trying to decide, should I contribute to the Roth side or to the traditional tax-deferred side? Which would you rather do? Well, keep in mind, contributing to the traditional 401k means you take home more in your paycheck now, this year, because that money goes in tax deferred. You don't have to pay taxes on it in the year that you earn it. So that's the benefit right now this year. But remember, I said tax deferred. That means you will have to pay tax on that money and all of the earnings from that money when you take it out later on in life. If you contribute to the Roth side of your 401k, you pay taxes on it this year, yes, but that money grows tax exempt for all of the years from when you put it in until you take it out in retirement. So when you're thinking about it, would you rather put money in the Roth 401k or the traditional 401k? Probably should aim for the Roth, unless you know for sure that you'll be in a lower tax bracket when you get to retirement. Should you be building up your emergency fund, or should you be paying down high interest credit card debt? Would you rather emergency fund or credit card debt? What's the right thing to do? Well, it takes a hard look at your finances. You need to think about, why did the credit card debt build up? Where did it come from? If it's a one-time problem or an illness or something that is not likely to happen again, then you can prioritize paying that down at the same time as your emergency fund. But if that credit card debt came from just not budgeting well, from not living within your means, then all bets are off. Your first thing you need to do is get that emergency fund built up because you're vulnerable. After you get your emergency fund built up, then you gotta tackle the problem that created the credit card debt. Think about it this way. If you don't tackle the underlying problem, that credit card debt will just come back. So take a good hard look, figure out what caused the problem with the credit card debt, and then you can take steps to knock it down. Thinking about when to start your Social Security benefits? You could take them as early as age 62, or you could take them at your full retirement age, or you could take them at age 70. Which would you rather do? Well, if you look at the numbers, it's really important to get the estimates and look at the numbers and understand the rules. For example, if you start your Social Security at age 62, you're taking a smaller benefit. And if you have any other income, that Social Security benefit could be reduced even further. So think about it. If you're going to have outside income, you may not want to start your Social Security at age 62. In that case, wait at least until your full retirement age. But then comes the question, should you start at your full retirement age or wait until age 70? You need to check the numbers. What you'll see is for every year that you wait from age 67 to age 70, your Social Security benefit goes up a lot, guaranteed. It's a lot to give up just to start a little early. So think about the numbers when you're trying to decide, would you rather start at full retirement age or age 70? In the market for life insurance, are you trying to decide between whole life or term insurance? Well, whole life insurance lasts as long as you live, your whole life. And it has cash value, so that when you're paying into it, at some point in time, your beneficiaries will receive a benefit. Compare that to term insurance. Term insurance is just for a term of period of time. So you only have that insurance for that length of time, and if you don't die during the term, then the insurance goes away and nobody gets any benefit. Thinking about it that way, why would anyone ever pick term? It's a lot cheaper. So when you're thinking about it, think about why you get the insurance. Who would be hurt financially by your untimely death, and how long will they be subject to that risk? If you have a big mortgage and little kids, you need insurance. But by the time that mortgage is low and the kids are launched, maybe you don't need any more. If that's your situation, probably you're a candidate for term, and then take the difference in the premium that you would have put if you had gotten whole life and invest it. Would you rather term versus whole life? In most cases, buy term and invest the difference.